There's a notable deal in the REIT space today. Northview Apartment Real Estate Investment Trust will be taken over for $2.5 billion by Starlight Group and Kingset Capital. That is a $4.8 billion deal, including debt. It's one of Canada's largest publicly traded multi-family REITs. Jeff Olin is president and CEO of Vision Capital and an investor in real estate. So let's start with the multifamily REIT universe and this transaction and your thoughts on it. Just what's driving this today?
We're not surprised about the transaction. The reason our business exists is one can buy real estate cheaper in the stock market than the property market. We've benefited from 18 similar takeovers in the last 11 years. So there's a wall of capital, institutional capital, pension fund capital. When you had over half of the sovereign bond market globally trading at negative yields last year, that was weird. And so they need to find outlets for this capital. What we are surprised about is the price for this transaction in these markets. Northview is primarily secondary and tertiary markets. This is not where the immigrants that are driving apartment markets are coming to Toronto, Montreal, Calgary, Vancouver. This is, Gander, Newfoundland, Lloydminster, Alberta, Lloydminster, Saskatchewan. These are secondary and Fort McMurray. I've seen that portfolio in Fort McMurray. These are Class C assets in secondary and tertiary markets. We're surprised. It's about a 20 to 25% premium to the net asset value in our view.
So what's your thought about that? Because does that speak to your point, capital that's looking for a home, and will we see other valuations for other possible transactions getting out of whack, too high?
Yes, too much money. I don't think it's going away, frankly, because we have a low interest rate environment. We have an aging population. It's probably going to be lower for longer. There is a need to place this capital, but I think it's a point in the cycle you need to be a little bit more judicious and look at the underlying real estate, not just the capital market aspect of it.
And when we talk about point in cycle, we mean economic cycle. I'm curious to know, we just talked to Dave Rosenberg about kind of probability of recession and things beyond Canada's control. How do these kind of portfolios fare in a recessionary environment, keeping in mind that there is capital looking for yield here, so that's not going away?
Canadian economy generally has been really buoyed by immigration.
Right.
370,000 immigrants going to 450,000. What people don't talk about is 750,000 foreign students. This is all beneficial to rental apartments, but they're not going to secondary and tertiary markets. And so that's the disconnect, where you have names like Capreit and Minto and Killam and Interrent that benefit from some of these factors. We don't see it as much in something like Northview. And so I think it's time where you need to be more discerning in that regard.
We have seen the effect of the coronavirus and all of the kind of related behaviors and closures on a whole bunch of industries. Is there an effect on the real estate industry here? Sure.
There's both a primary effect and we'd call the second derivative effect. The primary effect would be more travel related, so hotels. Yep. Definitely are the front line. So you've seen, we're a long short fund. When January went short some of these U.S. hotel names, particularly those that are exposed to China. So that's the front line. You'll see those, it's RevPAR, difference between the combination of rates and occupancy come down for sure. Marriott has said that they think it'll have about 100 basis points impact to their RevPAR, or Hilton, I should say, and probably takes 3 to 6 months to recover. So that's the front line, but it's a second derivative that I think we need to worry about. What's going to happen to the economy in general when China, when we had SARS, it was like 4% of the world's economy. Now it's 16%. Right. And that, I think, you need to be more concerned about, that second derivative that impacts the economy, your question about the Canadian economy, and does it turn over? Because real estate is really driven by, economic activity.
And then we've only got about 30 seconds, but another part of the equation for real estate would be the interest rates. There is some sense now that if anything, banks will have to lower in the face of what's happening economically and with Corona. So what's the implication there for a REIT?
Well, lower for longer is good for REITs, but if and when rates go up, you got to ask yourself why. If it's a credit crisis, that's brutal for real estate. If it's inflation, it's good for real estate. It's because of a strong economy, that's good for real estate.
Great to have you here, Jeff. Appreciate it.
Thank you.
Jeff Olin is president and CEO of Vision Capital.